Welcome to the San Antonio housing market update for the month of June 2024. So all this data that we're going to go over today is first and foremost the national data. We're looking at inventory numbers, we're looking at price appreciation projections, and then we're going to also look at what investors are doing in this market to survive, to make wise choices in this environment for themselves. Some of you buyers and sellers alike can use this tactic that investors are using to buy real estate today. I'll save that for the end, so stick around until the end. So let's get into the national numbers. And as we can see here in this first chart here nationally from Realtor.com, that inventory changes are fluctuating wildly throughout the country. On average, we're looking at 35.2% year over year increase in inventory. So there's a lot more homes on average available now than there were last year. And we can see that continuing in the monthly market report. If you've been tuning in for a while, you'll see that we have been adding inventory. Homes are still selling, but we're continuing to add inventory here in the local San Antonio housing market. Texas housing market has 42% more listed homes for sale still on the market than it did last year. We're looking around the country here. Florida has 70% more housing inventory available. Georgia 49%, South Carolina 46%, Arizona 68% more inventory in the housing market. And then on the flip side here, Nevada, negative 24% housing inventory available there, and almost 10% less inventory in South Dakota. So not all the same story in every single market. You'll notice that in even just neighborhoods around here in San Antonio, some of our suburbs, Live Oak, Converse, they're all going to have some slightly different numbers. Some more, much larger numbers than others. Or differences rather. So you just really have to take it neighborhood by neighborhood right now and know that there's going to be differences when we're looking at inventory. So this next graph here shows the inventory story in just a little bit different format on a yearly basis. Right now we are in that green bar 2024. This is showing that we have over 787,000 units available. This is countrywide here. Last year we had about 582,000 units available, and of course those pandemic years, you see there we were under 500,000 units available in the country. And then of course pre-pandemic we had over 1 million units available, and that was actually low. So we're still lower than pre-pandemic as a country, but we're still seeing signs that the inventory is improving continually, and we still need more. We frankly need more inventory on the market. We hope that it doesn't come all at once, but nevertheless, we are seeing a return to more choices for home buyers in the market. And now for the home price forecast, as we can see here, we've got 7 different entities making their predictions, and the average across the country for home price appreciation for the rest of 2024 comes out to 3%. This is making a lot of assumptions. This week we have another Fed meeting, and they're going to give their hints again on whether they're going to cut interest rates. I've turned pessimistic on them cutting interest rates, but you never know what's going to happen. And even if they do, I don't expect that a cut in interest rates is going to make a big difference for us here in 2024. So I think these 7% rates that we're seeing right here is probably going to be what we're stuck with in 2024, but I could be wrong. So we'll just have to see how that plays out. And now getting into the numbers that you're really looking for here in the San Antonio housing market. We're still in that seller's market zone. We're still in that blue area there. We're aiming for that balanced market. That's the sweet spot where the market really has, a kind of a give and take. Sometimes the seller comes out ahead, sometimes the buyer comes out ahead. that's the an ideal place for the market for buyers and sellers alike, even because if you sell your home, you need a place to move. So you've got both those things to consider. Right now we have 4.21 months worth of inventory. This is a pretty big increase though. This past month of May, we had 11.67% increase. That's a pretty big jump in inventory. Homes that haven't sold, they're still on the market. The month before we had about 5.5 to 6% increase in inventory. So as homes are new inventory is coming on the market, not all of it is getting sold, and it's continuing to sit on the market. Some of those are pricing issues. Some of those are issues where it's just the larger home and it needs more time to sell because people are progressing from, or rather shying away from buying larger homes because things are so expensive, and they're buying smaller houses right now. The list price to sold ratio at 97.7% after it's been priced right. So that's really good. That still shows that we're in a seller's market. As we continue to go into a balanced market or even a buyer's market, you can see this percentage come down. But for right now, it's still a pretty strong percentage in the favor of sellers. Median, the days on market, we're looking at 33 days on market in the median. So just the typical homes that are priced close to the middle are taking about 33 days to get sold. The median sold price is sitting at $295,900, and that is down about 1%, a little off from what we're used to in the May-June time frame because really interest rates, we're looking at those rates, they've stayed high. We thought we were going to get some cuts. Those cuts have not come. So therefore, we're looking at lower median sold price numbers. The median estimated property values right now sitting at $282,150. Last month, we did see a dip at negative 3.6% and a year-over-year decrease in median estimated property values at 3%. So our values did come down this past month in particular. New listings. These homes just been listed in May, and the typical most common listing price came in at $309,990. That's a 1.6% month-over-month decrease. So the new listings that are coming online are being priced better. So good job there for those sellers that came in and they priced their homes better. The number of properties sold, 3,225 properties sold. That is, listed. That's a big increase, almost 20% increase in the number of listings. So more homes coming on the market, people coming in there and deciding, okay, we're going to get this house sold. So that is good news for buyers. The median living area square footage coming in at 1,839 square feet. That is down. So these homes are exactly what folks are looking for, a little bit smaller, not too big. That's really a sweet spot. About 1,800 square feet or less is, to me, is a sweet spot right now in this market. Active listings. These listings haven't sold yet. The price, or the most typical price that these active listings that haven't sold yet is coming in at $318,000. So it's a little higher than the new inventory that is coming online. So they're up over 9,000. Now, whether that is too high or not, it's on a case-by-case basis. But nevertheless, they're now lumped into this number of properties, 7,074 properties in the area, with typical days on market at 51. So that is a little concerning if you have a larger home, or if it's priced up there and there's a lot of other comparable homes on the market for sale that are about the same, maybe even in a different area. So you really kind of have to expand that search and look and see what is available that you're competing against to get it priced right. Moving into new pending listings. These homes are now pending in May. They were newly pending. the typical price for those homes came in at 289,900. Number of properties, 1,623 properties became newly pending in the month of May. That's a decrease of about 15%. And the median living area came in at $1,811. So those are all numbers that work for what we're seeing, what the buyers are wanting to be in, and the sellers are being rewarded with contracts. And you can see that here in the days on the market. Only 28 days on the market. That's down 20%. So it's all about how big the house is right now, how it's priced. That is what is driving these quicker sales that we're seeing in the marketplace. Pending listings, these were already pending and coming into May, and those typical prices came in at $310,000. Number of properties, 2,316. That's actually down 6.2% from the previous month. Days on the market, about 29 days. So very similar to the new pending listings. These were a little bit larger homes at 1,900 square feet, but really close to that par there for the new pending listings. It's previously sold listings, homes that sold in May. The typical price for homes sold in May came in at $295,900. And the number of properties that were sold, 1,675 properties. So still right in that sweet spot, under $300,000 is what is really moving in the market right now. That's what folks are able to afford and able to take to the finish line with today's interest rates. Looking at month supply, 4.21 months of supply. The change again, 11.7% change in supply, and over the last 12 months, 39% increase. Now, as promised, I want to tell you what investors are doing to weather the storm in today's market due to high interest rates. Because let's face it, investors are facing some of the same constraints that homeowners and buyers are facing today as well, because investors use a lot of leverage. They borrow money to buy real estate, whether it's to buy it and flip it, or buy it, renovate it, and sell it. And that money has gotten very expensive today. So a strategy that I'm seeing deployed a whole lot in investments is what's called subject to. Now this is basically another form of assumption. That's right. The assumption game is not just for homeowners and buyers, it's also for investors. So if you've already watched my video on home assumptions, then you're already ahead. But if you haven't deployed the tactics yet, then you're being left behind. I'll leave a video here at the end for you to look at mortgage assumptions. But just keep in mind, every day I'm getting notifications from investors that have deals under contract from homeowners, and I'm talking turnkey properties that they're selling at a discount that has an assumption on it, okay? You as the homeowner ought to be selling that property on the open market for a premium versus selling it at a deep discount to an investor. So keep that in mind as you're moving forward. If you have a USDA, FHA, VA home loan, you could be selling your home for up to $10,000 more than other comparable properties in the area and attracting a whole lot more buyers. So hopefully that helps you guys, and I'll see you guys on the next video.